Hey friends, I am back with another episode of Making Sense of Your Market. Today is Friday. It's March 17th, 2023. Listen, I was not able to make a video last week because I was down in Las Vegas speaking at the Modern Mortgage and Real Estate Conference. There was about 20 of the top mortgage and real estate agents from across the country down there. And the reason why I tell you this is because the general consensus among all of these high performers in real estate and mortgage is that real estate is stronger than ever right now. The sky is not falling. Here's why. Over the last week, you've seen the news with 2 or 3 or 4 banks nationally fail. They're failing. It started with the Silicon Valley Bank. All of this now is triggering emergency meetings by the Fed. The Fed is going to step in and redirect course. So remember, the Fed was raising the Fed rate out of control, faster than they have in the history of the United States of America, to beat down inflation. It worked a little. Some would say it worked a lot. It was working, but now we've got a problem. They've got to come back in and provide support to some of these banks. Some would argue that the Fed raised the Fed rate out of control, which is causing these banks to fail. So what we're probably going to see in the next 30 days is the Fed come in and make money more affordable again. You need to keep an eye on that, and that's what I'm going to do with these videos. Now, I want you to follow me, if you're not already, on Instagram, at MyMortgageGuyDan, okay? I'm providing commentary in my stories throughout the day, every day, on the banking crisis, how it's impacting real estate and mortgage. What we're seeing right now is we're seeing that it will impact the mortgage industry because mortgage rates will start getting less expensive. The 10-year treasury is the number one indicator of that. And this week, the 10-year dropped, which caused mortgage rates to improve just slightly. So right now, mortgage rates are right between 6.75 and 6.99% for a 30-year fixed conventional mortgage. That's not a rate quote, it's just a range right now. So let's keep an eye on the 10-year treasury. Let's keep an eye on what happens with more of these banks coming out going, hey, we're in trouble. And then the Fed, the U.S. government's going to come in and help them out like they always do. But that's going to cost us money. That's called quantitative easing. That comes from taxpayers' money like it always. There's always going to be a repercussion for any stimulus that the government gives, but they have to do it right now. So stay tuned for that. It's a good thing for mortgage. Now, if mortgage rates drop, this is why I think that's why I say it's a good thing for real estate. As mortgage rates drop, home values will continue to rise and the housing market will get more and more competitive. So we saw a little bit of slowdown in housing because rates went up so fast over the last year. Now, just in the last 3 to 4 months, we saw housing pick back up regardless of how high mortgage rates were. So that's an indicator of how strong the housing market is. JP Morgan last year bought over $1 billion in residential real estate. Okay, we saw a lot of other investment firms do the same. I believe they saw these times coming. They saw that the Fed was raising the Fed rate out of control. They knew that banks during 2020 and 2021, where there was additional $5 trillion in stimulus given to Americans had to take that stimulus in the form of checks and then go and deposit that into their accounts. Banks, when you deposit money, they instantly go out and invest that money and trade to make money off of your money. They saw this coming. Okay. And so I think what I want to do, and my message to you guys, is to help provide, I don't like the crystal ball analogy, but to provide some insight, what banks and investors are looking for in economic conditions and how you can use that to your advantage. I think mortgage rates are going to drop. Like I've been saying, I think the housing market's going to continue to pick up. I believe that the housing market is stronger than ever because housing is safe. Your money isn't necessarily safe at the bank. The stock market's dropping. Crypto's failing right now, okay? Housing isn't. It's safe. It's tied to something that people can actually use and live in, and there's only a limited amount of it, okay? So hope that helps. Now, real quick, in 30 seconds to 60 seconds or less, the Silicon Valley Bank debacle, everything that's happening with these banks. I mentioned earlier, it's important for you to understand there's no fraud that has taken place. When stimulus was given during 2020 to 2022, not just the current president, previous president. So not one administration is to blame for this, by the way, you guys. There was $5 trillion of stimulus, extra money that was brought into the U.S. economy. It was given to people. It was given to American citizens. They deposited it into their accounts. The banks invested at that time. Now understand this. Banks invest in long-term treasuries and bonds, okay? So when they do that, and they get about a 4 to 6% return on that, when they do that, it's all good when deposits are being made and money was cheap like it was back then. But when the Fed comes in and raises rates, and when rates go up, that devalues those bonds. And so when they needed to sell those bonds, let's say they sold $1,000 in bonds, they were getting about $480 to $500 for that $1,000 bond that they bought. So they lost a ton of money. That's what we're seeing right now. That's why the Fed's going to come back in and most likely lower interest rates in the near future. Good for our industry, good for housing. So pick your economy. My message to you today: pick your economy. You can buy now in a healthy market, limited inventory, probably get a good deal on a house, interest rates in the 6s, or you can wait 6 months to a year, buy when rates drop, but house values will be way up, so you'll pay more. Whatever option you choose is not a bad option. So don't try to time the market. Try to be in the market and time it when it's best for you, not based off of economic conditions and mortgage and real estate conditions, okay? Option A, option B, both good options. Just pick one, okay? I hope this was helpful. If you found this helpful, share this. Make sure you follow me on Instagram. You're gonna find information every single day, data, not drama over there, and I'll teach you what you need to know about this market so you can make a smart decision when the time is right. All right, bye for now.